Stay with that story. Amid growing concerns over economic instability, South Africa is now facing the potential fallout from the Trump administration's decision to impose a 31% tariff on imports. Now, the move has also raised alarm within key industries, particularly the automotive sector, which has long relied on duty-free access under the African Growth and Opportunities Act, popularly known as AGOA. And helping us to look at how the markets are currently looking now is Mr. Lindile Malgas, investment strategist at ABSA Investments. Lindile, thank you so much for your time today. Welcome. So I suppose big news of the day on a Friday, a global financial shockwave has sent markets on a downward spiral. But let's bring it closer to home. How will this 31% tariff hike on South African imports directly impact those key industries, particularly, like I mentioned in my intro, the automotive sector, which relies on duty-free access under AGOA?
Yes, hi Alicia. And firstly, we do see the tariffs that are being imposed on South Africa to be quite negative from a consumption point of view. And it does make our products less competitive if you think about it within the US markets. So from that point of view, it may lead to lower demand for South African products. And then from a local point of view, we will see some of the producers scaling back on the production. And that has an even bigger effect. If you think about it, it may affect the employment levels as well. And if you're thinking about the automotive sector and comparing that to some of the other key industries, we do think that might face the biggest impact. So if you're looking at things such as the food and wine exporters, they may be able to redirect some of those goods way quicker than what you'll see with some of the automotive makers. And as a result, we do think that there will be severe impacts for the automotive industry across the board. But what is quite particularly positive from a steel and aluminium point of view is that those tariffs that have been imposed, and that being blanket tariffs, that may also level the playing field from a South Africa point of view and make it more competitive compared to some of the steel producers as well.
But Lindile, I mean, with AGOA, there was already an expectation that South Africa was going to be, in any case, likely to be booted out of the program soon. But I suppose there was still not an immediate plan of action as to how we could actually recover from such a move. But now we basically being caught unprepared. How do we manage this current impasse? Do we move fast and break things in the form of retaliatory tariffs, or what is our other option? Because diplomatic talks haven't assisted.
Yes, so I think firstly will be to continue engaging with the US and trying to see whether or not we can mend those relations from a diplomatic and international trade point of view. But also what will be key will be South Africa sort of using their leverage, particularly seeing that we are quite a key exporter of gold, so precious minerals such as gold and platinum group metals, and using that leverage to sort of leverage a position out with the US. And also quite positive to see that those have been exempt from the tariffs currently. And then what may also be key is that we continue to focus on building internal capability from a South African point of view. So continuing to ensure that we can grow production from a domestic point of view and making sure that we can consume some of those products. And then lastly, but not really favorable, we'll be trying to find alternative markets. However, that does face stiff competition with some of the exporters having established their positions there already.
A very quick one on those alternative routes, Lindile. I mean, given the current market volatility, what effects are we likely to see on investor confidence as well as the value of the rand? I mean, suggestions are for South Africa to seek alternative trade partners, intensify our current bilateral relations, even right here on the continent. I mean, you heard the Minister of International Relations there a short while ago also echoing this sentiment because the US is actually our second largest trade partner.
Yes. Yes, so we think from an investor confidence point of view, I think confidence is definitely starting to dampen, as you've seen with the market performance this past week. It has been excessively volatile, as you've seen. Even today, markets are trading in the red. So I think it will be negative from that point of view. During periods of economic uncertainty, investors are less reluctant to invest into the economy, so that will be negative from an economic growth point of view. But from a markets point of view, we do think that it is important to stay the course, because markets do exhibit these volatilities such as we're seeing now as markets continue to go through various market cycles. And for us, more than anything, I think it presents an opportunity to buy quality companies that may be able to weather the storm during periods of uncertainty as well.
Absolutely. Lindile, thank you so much for your input this afternoon. Mr. Lindile Malgas there on the global storm that has been caused now by the announcement of tariff hikes by the United States.